Hello aspirants. So today we are going to talk about public finance. Now this topic is also known by another name, that is fiscal policy, as well as in some books it has been written as budget. Okay. So this topic has three names. One is public finance, another is fiscal policy, and another is budget. Now if I talk about fiscal policy or public finance, so first of all, you must know the meaning of fiscal policy. So meaning part is important because that will develop your base, or you can say concept clarity. Now, when we talk about fiscal policy, so there are two words. One is fiscal, another is policy. So I would like to start with this policy and then fiscal. Now, as the word policy in general means that there is a strategy for something. Okay. Now, policy word means that is strategy for something. So we are looking for strategy of what? That is more important. Okay. So here policy word means strategy. So that strategy is for what? That is fiscal. Now here fiscal means money available with the government. Here fiscal means money available with government. So if you see the money available with government is in three funds. Okay. Now what are those three funds? Number one, consolidated fund of India. This is the first fund. Number two, contingency fund of India. Fund of India. And number three, public account fund of India. So we have these three funds which are mentioned in your Constitution of India also. They are mentioned in Constitution of India also. So whatever money available with the government in these three funds, and when you are managing that thing, that is called as public finance, or you can say fiscal policy. So you can say whatever is the government strategy with respect to these three funds, or you can say money available with the government in these three funds, that you have to study in fiscal policy. So no doubt in most of the books it has been written that fiscal policy is equal to budget, but that is partially correct. So fiscal policy is more than budget. So this is what you have to remember. So in end, I can say that fiscal policy is the management or strategy with respect to money available with government of India. So here my focus will be on government of India. So just like government of India, state government also has these funds. So we are preparing here for UPSC. So the focus is on union government or central government. So that is why government of India with respect to money available with government of India in all the funds. So you can say these all the funds are type, you can say a form of accounts with the government. So like you also have your accounts. Okay. So you have multiple accounts. So for example, if any person is having more than one account, that is in banks, so you can say that when you are managing money in those accounts, from where that money is coming in those accounts, then where you are spending it, okay, or how you are then utilizing that money. So that is called fiscal policy. So you cannot say that fiscal policy is only budget. Okay. So fiscal policy is more than budget. So I hope you agree with this. we can say that is more than budget. Now, when I'm using a word budget means, because when it comes to budget, so budget only deals with only one type of fund or deals with only one account, that is Consolidated Fund of India. So whatever money, that you are getting, or you can say whatever taxes that you give to the government, they will go to this fund, Consolidated Fund of India. Similarly, whatever fees, fines that you give to the government of India, they will go to this fund, Consolidated Fund of India. But you know that there is, you can say, some people, those who are working, so they used to have provident fund, or they used to contribute money to the provident fund, or you can say pension schemes. So that money goes to the public account. Okay, so although provident fund money is collected by Ministry of Labor and Employment under, you can say, a fund that is provident fund, so that fund is now going to become a part of public account. Similarly, you take or you invest in so many small saving schemes, like for girl child we have a scheme like Sukanya Samriddhi Yojana. So whatever money is collected through that route, okay, that is Sukanya Samriddhi Yojana, that will again become a part of public account fund. So this is what you have to understand. Okay, so budget only has connection with Consolidated Fund of India. Okay, whereas other funds has connection with, you can say, or you can say their source as something else. So here you have to understood that money in all these funds is coming from, you can say, different areas or different sources, and government is utilizing it at different places also. Clear? So ultimately what you have to remember, that when you are managing all these funds, so that is called fiscal policy. So budget only deals with Consolidated Fund of India. So this is what you have to remember. Clear? So that is why I use the word fiscal policy is more than budget. So I hope you agree with this. Okay, and if you agree with this, you tell me in comment section, okay, that yes sir, we agree with this term, and you have a conceptual clarity also. Because if you have this conceptual clarity, then only you will understand this topic. So that is why the name of the topic, public finance also. So if you see, either it is Consolidated Fund of India or contingency or public account, okay, so you will see one thing, that all these have a money which is of public, okay, which is of public. So this is what you have to remember. Clear? So here, this is what you have to remember. So I hope this concept is clear to you, or you can say meaning of fiscal policy is clear to you. So now whenever you read any book, so there if it is written like fiscal policy is budget, okay, so which is, you can say, the annual statement of receipts and expenditure of the government, okay, so you have to tell that yes, this meaning is correct, but it is partially correct. Clear? So this what you have to remember. Okay, now in today's session, my focus will be on budget. So when I am talking about budget, so it means I am talking about the components of budget. So first I'll talk about the components of budget in this class. So this component of budget is very important. Now why it is important? Because every year you will find a question from this topic. So even in mains also they are asking question from this. So you can say this is the base part of the chapter. So if you understood the component of the budget, then you will understand the other part of this chapter. Clear? So this is very important. Now if I talk about components, so you will see that budget has two components. One is receipts. So it is not receipts. So it is called or pronounced as receipts. And second is expenditure. Okay. Now when I talk about receipts, receipts are further classified into, so this thing you have to remember by heart. So आपको मतलब this thing you have to must be in your mind, because if you are able to remember this thing, you can solve many questions. Okay. So which I'll tell you in later classes. So if I talk about receipts, so receipts are further of two types, that is revenue receipts and capital receipts. Similarly, expenditure is of two types, that is revenue expenditure and capital expenditure. Clear? So here, if you see, when we talk about revenue receipts, when you talk about revenue receipts, okay, so revenue receipts are further classified into tax revenue receipts and non-tax revenue receipt. Tax revenue receipt and non-tax revenue receipts. So you have to remember this thing. Okay, that is revenue receipts are further of two types. So again, I'll tell you tax and non-tax. Clear? So this is what you have to remember. Okay. Now the question that can come from this topic is, like for example, they used to ask that which of the following is or are part of revenue receipt. Similarly, they can ask you which of the following is or part of capital receipt. Similarly, they can ask you which of the following is or are part of revenue expenditure. And similarly, they can ask you which of the following is or are part of capital expenditure. So you can see the previous year questions, as well as you will find in so many model questions also, that the same type of question. So if you remember this diagram, you can easily answer such questions. Although in future we'll talk about deficits also. So if question comes that how to reduce your deficit, so you must first know that what include receipts and expenditure, because deficit can be reduced when you either decrease your expenditure or increase your receipts, or both. That is, on one side you are decreasing your expenditure and on other side you are increasing your receipts. Then only deficit can be reduced. Or you can say the concept of deficit can be understood when you know this table. So this table is very important. So now we are going to see what these includes. Okay. So as I told you, that directly question used to come from these things. Clear? Now, first, if you see, revenue receipts has two parts, tax revenue and non-tax revenue. So if I talk about tax revenue, we'll write in short RR. So RR stands for revenue receipts. So it has tax revenue and non-tax revenue. Clear? So when I'm talking about tax revenue, it includes direct tax and second is indirect tax. Now direct tax include, for example, income tax. So there are multiple examples, corporate tax, etc. Indirect tax, a best example is GST, that is goods and services tax. So this is what you have to remember. Okay. So income tax, corporate tax are the example of direct tax. Indirect tax include GST, that is goods and service tax. Clear? So this is what you have to remember. Now why we call it direct and indirect? Because in the case of direct tax, the person is identifiable, means the person who has to give the tax. Whereas in the case of indirect tax, the person is not identifiable. Now I know that you are definitely confused what I want to say. Now, whenever the source of income is generated, in the case of direct tax, the one who has to pay the tax is identifiable in the beginning stage. Whereas whenever in the case of indirect tax, whenever the source of income is generated, we don't know who is going to pay this tax. For example, if suppose you started a job or you started a new job or a new company, so you know that your new job or new company, you are going to generate some money. That is a source of income for you. So the one who is generating that, we know from the beginning itself, at the end you have to pay the tax. So that is why direct. In the case of indirect tax, for example, if suppose in your company you manufactured this pen, no doubt this pen has monetary value. But the one who is going to purchase it, that person is going to pay the tax on this pen. So in the beginning, we don't know who is going to purchase it. So ultimately, the monetary value has been generated in the beginning. And we don't know who is going to pay the tax. So that is why it is a part of indirect tax. But where if we know in the beginning itself that this person is going to pay the tax. Okay. So that is called as direct tax. So in case of, if suppose you have a company, you have a profit, so no doubt on your profit, corporate tax will be imposed. Whereas if you have a company and whatever product you are producing, finally who is going to pay the GST on that, we don't know. So that is why indirect. So I hope the clarity on direct and indirect is cleared. And if you are able to understand the concept, so I want from your side that you must give, or you can say reply in comment section also. Okay. So if you put in comment section, if you have any doubt also, no doubt I'll try to resolve that also in your comment section. Although you can also contact me on my Insta page. Okay. So ultimately I'll again write it, that is economy underscore Himanshu. Or if you search on Insta page Himanshu Dhingra, so you will get it. Okay. So ultimately, whatever doubts you have with respect to economy, you can ask me without any hesitation. Okay. Although your doubt is of whatever level, I am there to support you. Clear? So this is what you can contact me. Okay. There by messaging me there. But I'll reply you within 24 hours. Okay. Although I can reply you immediately also, depending on the availability of time. So maximum 24 hours I'll reply you. Okay. Or if suppose I forget to reply in 24 hours, so you do one thing, that again you send your doubt by putting a question mark. Okay. So that I can again reply you. So ultimately why I'm telling you, because sometimes I have a lot of doubts with me. Okay. Or you can say message compiled with me. So it needs time to see that in some order. Okay. So ultimately you can do that thing also. Clear? Now I hope the concept of direct and indirect is understood, and it is a part of tax revenue. So if suppose in future, if question comes that which of the following is or are part of tax revenue, and there is some list, so you have to identify option, matlab 1 only, 2 only, 3 only, or 1, 2, 3, whatever. So you have to tell that you need a clarity that it includes income tax, corporate tax, and GST, or you can say direct and indirect tax. Now we come to non-tax revenue. Now when we talk about non-tax revenue, what does it mean? Now in case of non-tax revenue, first of all, it includes fees and fines. Now tomorrow, if you appear for UPSC exam, you are going to pay the fees to the UPSC. So that will go to Consolidated Fund of India. That is as a part of non-tax revenue. Clear? So whatever tax and indirect tax you collect, that is a part of Consolidated Fund of India. Similarly, whatever we collect in non-tax revenue, okay, that will also goes to the revenue receipts. Okay, or you can say revenue receipts, which is again a part of Consolidated Fund of India. Number two, here, apart from fees and fines, there is user pay charges. Now I know that many students does not know about user pay charges. Now if you have seen your electricity bill, so in that electricity bill or water bill, you will find that there is one term mentioned, user pay charges. Basically what it is. Now you have your electricity meter outside your house. So you know that every month or after every 2 months, one person comes to your house. They note the reading of your you can say reading of your meter. So if suppose you have consumed 100 unit and per unit the charges is for example 5 rupees. So you will say that ki my bill is 500 rupees. Okay. But this is the unit that you consumed. But in order to consume that unit, you are getting electricity through some infrastructure. So you have to pay some amount for that. So whatever amount you are paying for the infrastructure, that is called user pay charges. So ultimately the unit you consumed is the amount, or you can say is the quantity of units that you have consumed for your own consumption. But whatever infrastructure through which it is coming, you have to pay for that. If you are not able to understand, take it or understand in this way. Now, if suppose you are not available in your house for 2 months, then also you will find that ki there is a bill, electricity bill in your house. So although you say that ki sir, I have consumed 0 unit, then why bill? So they will say that ki you have to pay for the user charges. So it is like this ki if I have a house in some society or flat in some society, I have to pay some, you can say, maintenance charges irrespective of I am staying in that flat or not. Okay. So ultimately if I am staying in flat, so then I have to pay other charges also. But if I am not paying, then also I have to pay some minimum maintenance cost. Clear? So that is called user pay charges. I hope now it is clear. Okay. So if concepts are getting clear, because this exam focus more on conceptual clarity in every subject, either it is economy, polity, geography, history, whatever you are studying. Okay. You will find concepts everywhere. Okay, that is why this exam, or you can say there is, or in UPSC it is mentioned general studies, not general knowledge. Okay, so if it is general knowledge, then I have given you a list and tell you that please mug up. Okay, so I have not elaborated so much. Clear? Clear. So it is general studies. So that is why you must know the meaning of every line. That is known as a read in between the line. Clear? Next, if you see, apart from user pay charges, there is another concept that is dividend and profit. Now you know that government of India used to invest in PSUs, or you can say government has ownership in PSUs. So in some PSUs they has ownership of, you can say 51%, some 80%, some 70%, some 90%, and somewhere 100%. So whatever ownership they have, accordingly they are getting dividends and profit every year. So ultimately dividend, you can understand, it's a, for a time being, you can understand it's a sort of bonus that you get on profit. Okay. Although when we'll do the chapter of industry, so there we'll talk about dividends and all those things. Clear? So dividends and profit. So this is what you have to understand. No doubt government of India used to give loans to, you can say, state governments or to other countries. For example, if suppose government of India has given a loan to any state, for example, take UP, Uttar Pradesh, Madhya Pradesh or Karnataka, whatever. So whatever loan they have given, for that loan amount, you are going to receive interest. So whatever interest is received, that is called as, or you can say that will become a part of non-tax revenue. So ultimately here you can write interest received by government of India. Clear? So interest received by government of India is a part of, you can say, non-tax revenue. So this is what you have to remember. Clear? Now, always remember that even when you go to bank to take the borrowing also, so there is two component. One is principal amount. So whatever amount you have borrowed, that is called principal amount. So for example, if suppose I have borrowed 10 lakh, so 10 lakh is my principal amount. Now on this 10 lakh, I have to give interest also. So it means, for example, if I have taken money for 1 year and at a rate of 10%, okay. So ultimately at the end, I have to give 11 lakhs to the bank. Means 10 lakh is the principal amount plus 1 lakh is the interest. Okay. So here I am only talking about interest received. I am not talking about principal amount. Okay. So ultimately this 1 lakh that I'll give as a interest to the banks after 1 year. So it means every month I am paying 8,000, 8 or 9,000, in between 8 and 9,000. So you can divide 1 lakh by 12. So it will come in between that range. Okay. So I am paying interest every month. Okay. Or you can say yearly also. So on total I am paying 1 lakh. Clear. So similarly, whatever government of India used to give borrowing either to any states or to any foreign country, like for example Bhutan, Sri Lanka, etc., whatever. So they are receiving some interest for that. So here I am talking about interest only, not principal amount. Remember. Okay. We'll talk about principal amount also, but not here. Okay. In capital receipts. Okay. Now grants received by government of India. Okay. So whatever grants received by government of India. So for example, if someone is giving charity to our country or to our government, okay, like in the times of COVID, okay, in the times of COVID, if someone is giving grants to the government, okay, so that will become a part of non-tax revenue. But provided here government has to specify that that grant is now going to become a part of consolidated fund of India. Clear? So ultimately, whatever grants that government is receiving from anywhere, okay, from either the public or citizens are giving, or you can say any foreign country is giving. So for example, if USA is giving grants to the government of India, okay, so that will become a part of non-tax revenue. So ultimately, if question comes that which of the following is or are component of non-tax revenue, so you have to tell these 5 are the components of non-tax revenue. So you can say in non-tax revenue there are how many items? In non-tax revenue there are 5 items. So remember these 5 items. Whereas in tax revenue, there are 2 items. That is direct tax and indirect tax. So this is what you have to remember with respect to revenue receipts. Now, when it comes to capital receipts, so in capital receipts, there are 3 items which is part of capital receipt. Number one, as I told you in non-tax revenue receipt, that government of India used to give borrowing either to the states or to any foreign country. So for those borrowings, they are receiving interest. Okay. So interest received is a part of non-tax revenue. But there will be a time that whatever amount they had given as a borrowing, which I called principal amount, so that also has to be recovered. So you can say recovery of borrowing or principal account amount, that will become a part of capital receipts. Okay. So you can say recovery of borrowing or principal amount. So I hope you have done in maths your compound interest and simple interest. So I am using that term only. So which you done in your school, that is 6th, 7th, 8th class. Okay. So I am talking about that only. So even you have to do in CSAT also. So be ready for that. Okay. So recovery of borrowing or principal amount, that is a part of capital receipt. Second, if you see that there is one term known as disinvestment. Now, whenever government goes for disinvestment, now what is disinvestment? Now, as I told you, that government has investment in PSUs, or you can say government hold investment in PSUs. So, for example, if government has 100% investment in PSU, okay. So, for those 100% PSU, if suppose government is planning to sell 10% of its shares or 5%, whatever, clear. So, by selling the shares from PSU, government is getting some money. That process is known as disinvestment. Now, here we are interested in this, that whatever money that government is getting through this process, that is this disinvestment, so that will become a part of capital receipts. So this is what you have to remember. Now, third thing that you have to remember is that borrowings. So you know that government of India also used to take the borrowing. Okay. So whenever government of India used to or take the borrowing or loan from anywhere, so what are those sources? We are going to talk about that, but not in today's video, in future videos. So whatever borrowing that government used to take from anywhere, that is also a part of capital receipts. Okay, so this is what you have to remember. Okay, so you can say borrowing taken by government of India. Okay, borrowing taken by government of India. So this is what you have to remember. Now, here you have to remember another classification, that above two are also known as non-debt creating capital receipts. Okay, whereas the third one is called as debt creating capital receipt. So above two are called as non-debt creating capital receipt, and last one is called as debt creating capital receipt. So what I am saying, that recovery of borrowing and disinvestment is a part of non-debt creating capital receipt, whereas borrowing is a part of debt creating capital receipt. So this is what I am talking about. Clear? Now remember one thing. That these, why we have classified into this way, and the answer for this definitely I am give to you, because in my class I will focus mostly on this thing, that whatever you study from either from me or any source, so you must have a conceptual clarity of every line. Okay, so I hope if you have seen my previous videos, so this thing you have understood, that more conceptual clarity you have, the more chances of clearing this exam will increase. Okay, so with respect to economy, if you maintain conceptual clarity or have conceptual clarity, I can assure you this thing, that whatever number of questions they are asking, you can easily solve it without any problem. Clear? So non-debt creating and debt creating capitals. Although the logic for this I'll tell you in future videos, but if you know the logic, you can comment in comment section. Okay, so I'll see it and reply there and try to reply there. Clear? Or you can see my future videos also. So there I'll give you the reply for that. But for a time being, remember that recovery of borrowing and disinvestment are part of non-debt creating capital set, whereas borrowing taken by the government of India is a part of debt creating capital set. Clear? Next, so in capital receipt there are three items. So if I again say that revenue receipts are classified into tax revenue receipts and non-tax revenue receipt. So tax revenue receipt has two items, and non-tax revenue receipt has 5 items. So tax revenue receipt has 2 items and non-tax has 5 items, whereas capital receipts has 3 items. Clear? So you please remember the names of these items. Now we'll come to expenditure part. Now if I talk about expenditure part, so we have revenue expenditure and we have capital expenditure. So when we talk about expenditure, so you can say revenue expenditure basically includes administrative expenses. Now what is administrative expenses? Now tomorrow if you get selected as a bureaucrat, so if you become IAS officer or any other officer, that is IPS, IRS, whatever, so you will get salary from government of India. So if you are working for government of India, so you will get a salary. So that salary is coming from, you can say, consolidated fund of India, and that will become a part of revenue expenditure. Similarly, to run your department, so tomorrow once you get selected, so you will be given a responsibility to run the department. Now to run the department also you need money. So that is why energy, or you can say money is the energy of the economy. Clear? So whatever money that you are getting, that will come or become a part of administrative expenses to run your department. Clear? So similarly, if you get pensions also, so that will part of administrative expenses. So whatever expenditure is there, so you get a car from the government side. So for that car, fuel will be there or fuel will be used. So that will become a part of administrative expenses. So ultimately, you get a house also. So to maintain your house, whatever you can say, if suppose government is giving you a house, so they have purchased land for your house, or you can say if the government has given you rented house also. So whatever is the expenditure on land or rented house, that is become a part of administrative expenses, and which is a part of, you can say, revenue expenditure, and ultimately part of expenditure. So in receipts, we have seen either it is capital receipt or revenue receipt. So they become a part of consolidated fund of India. So once they come into consolidated fund of India, then you will see one another thing, that whatever expenditure is there, that also comes from consolidated fund of India. Clear? So administrative expenses. Second, subsidy bills. So you know that government of India gives subsidy, for example, on fertilizers, food, LPG cylinder. So they are part of revenue expenditure. Clear? So for example, if suppose the cost of cylinder is 1000 rupees, so 700 is paid by you, 300 will be paid by the government in the form of subsidy. So on your behalf, government will pay 300 rupees to the company as a subsidy. Clear? So subsidy bill. Clear? Third, expenditure on schemes. So you know that there are two types of scheme: central sector scheme and centrally sponsored scheme. When we are talking about central sector scheme, here I am talking about that 100% is the amount given by the government of India. 100% is the amount given by the government of India. Clear? So ultimately, whatever scheme is there, 100% is given by government of India. Whereas when it comes to centrally sponsored scheme, so it is shared between center and state. So these are called centrally sponsored scheme. Clear? So for example, MG Narega, that is a government scheme. So in order to run the MG Narega scheme, so government has to spend. So that will become a part of revenue expenditure. Next, if you see, apart from this, if suppose, as we have seen, that government also used to take a borrowing, means government of India also used to take a borrowing, or you can say principal amount. Now, the government also has to give interest on that. So whatever interest is paid by the government, that will become a part of revenue expenditures. You can say interest payment by government of India, or you can say interest paid by the government of India. So this is what you have to remember. Now, apart from this, there are other things also that will become part of revenue expenditure, like defense expenditure. So expenditure on defense is a part of revenue expenditure. So this is what you have to remember. And sixth, if suppose government of India is giving grants, you can say grants given by government of India. So in the previous one, we have seen that grants received by the government of India, which becomes a part of non-tax revenue. Okay, so that becomes a part of non-tax revenue receipt. But here government of India is giving grants. Okay, so they are giving grants either to, say, you can say states or to any other country. So grants given by government of India. So there are six items under revenue expenditure. Clear? So this is what you have to remember. Now, when it comes to capital expenditure, so first of all, you can say whatever amount spent by the government on infrastructure, for example, road, railway, etc. So that becomes a part of capital expenditure. Clear? that becomes a part of capital expenditure. Second, you will see, or we have talked about, that government used to recover the borrowing. So they will recover the borrowing only when they have given a loan. So if suppose government has given a loan, okay, so whenever they give a loan, that will become a part of capital expenditure. Okay, so loan given by Government of India to states and, or you can say and or any other. Any other means foreign country. Okay, or any other. And third is Government of India. Government of India, whatever borrowing they have taken for that. So whenever Government of India has taken a borrowing, that becomes a part of capital receipt. Whereas whenever you can say Government of India has to pay the interest also, that becomes a part of, you can say, revenue expenditure. And there will be a time when they have to repay, or you can say in principal amount they have to pay it back. So that will become a part of capital expenditure. Okay, so you can say principal amount paid back by Government of India, that will become part of capital expenditure. So there are three items. Now I know that you are confused little bit here in second and third. Okay, because I know your weakness or where student gets stuck. So we can understand in this way. So there are two cases, case 1 and case 2. So when I talk about case 1, so in case 1, assume that Government of India has taken a borrowing. Okay, so in case 1, Government of India has taken a borrowing. Now whatever borrowing they have taken, no doubt for that they have to pay interest payment by Government of India. Now they have taken this borrowing for some time, means for 1 year, 2 year, 3 year, 4 year, 5 year, whatever. So for whatever time period they have taken, so that is called maturity period. So if suppose 5 years, so you can say my maturity period is 5 years. So I have taken it for 5 years. So after 5 years or whatever time, I have to repay my principal amount. So you can say principal amount paid back. So if you see, when Government of India is taking a borrowing, so that will become a part of capital receipt. Now interest payment is a part of revenue expenditure, and when they pay back principal amount, that will become a part of capital expenditure. So this is what I have written in capital expenditure. So don't get confused. Clear? It's very simple. Okay, economy is a very simple subject. Okay, if you study it with conceptual clarity. Okay, so here remember one thing, that although with respect to other subjects, if I talk about polity, history, you will understand easily in first reading. Okay, but when it comes to revision, it will take a lot of time, and this is fact. But with respect to economy, if you understood the economy, it will take time to understand. But once you understood it, revision time is very less. So if you are seeing my video every day, you will realize one thing, or I can say you with surety, that at least 50 to 60% you will remember. So that will only possible if you see my video once or twice with concentration. It is not like that you play the video and then you are doing something else. Then you are not able to understand. Okay. So if you see my video even for once, that is with full concentration, I can say you with surety that at least 50 to 60% you will remember at one go only. And when you see it twice, so around 80 to 90% will be in your mind. Clear? That is with surety. So if you are listening this part, so you please comment me that you are able to understand or not. Clear? Now case 2. Now in case 2, we assume that, like in case 1, we have seen that Government of India has taken a borrowing. So in case 2 we see that the government of India has given a borrowing. Has given a borrowing. Either they have given a borrowing to states or any foreign country. Okay, given a borrowing. Now whatever borrowing government of India has given, for that they are going to receive interest. Interest received. Plus, once the maturity time period is over, means for example, if they have given a borrowing for 3 years, so means after 3 years there will be recovery of this principal amount, okay, or borrowing amount. So you can say recovery of principal amount. Clear? So if you see this thing, so can we say that whenever they are giving a borrowing, okay, so in this case they are taking a borrowing, so that is a part of capital receipt, but here they are giving a borrowing, so that is a part of capital expenditure. Now they are receiving interest, so that will become a part of revenue receipt, and under revenue receipt this is a part of non-tax revenue. Okay, recovery of principal amount. So this recovery of principal amount is a part of capital receipt. So this is what is a very simple funda that you have to remember. Clear? Because normally students get stuck in that only. Clear? So I hope now you are able to remember what is receipts, what are expenditure. They are classified into revenue receipt and capital receipt, and similarly they are classified into revenue expenditure and capital expenditure. Now what it includes, that is important because you can find direct question from that, ki which of the following is or are part of, you can say, revenue receipts or revenue expenditure, whatever. Clear? So if you know this thing, so this question becomes easy for you. Clear? So you can see previous year questions also, that you can get this question. Even you can see mock test questions also, that you will find similar questions. So if you remember this table, so it is easy for you to remember the concepts. Clear? Now when I am talking about total expenditure, so total expenditure means revenue expenditure plus capital expenditure. So if I talk about this year means this financial year. So this financial year, which starts from 1st April 2023 and ends on 31st March 2024. So if you see the total expenditure that government is going to do in this financial year is, that is estimated around, can anyone can guess? That is estimated around 45 lakh crores. So this is rupees 45 lakh crores. So I'll mention it rupees. Rupees 45 lakh crores. So this is, you can say, my capital expenditure plus revenue expenditure. So this is the amount that government is going to spend in this time period. That is 1st April 2023 to 31st March 2024. Now similarly, if I see receipt part, so when I see receipt part, I am interested in revenue receipt plus non-debt creating capital receipt. So already I told you that when we talk about non-debt creating capital receipt, so there are two components, that is disinvestment and recovery of borrowing. Okay, so ultimately revenue receipt has, you can say, revenue, tax revenue and non-tax revenue. Tax revenue has two components, non-tax has 5 components, and non-debt creating capital receipt has, you can say, your 2 components. So if you see that what is the amount or receipts that government is collected through these sources as in this time period, that is the same time period, is it is around rupees 27.2 lakh crores. So it means my borrowing for this financial year is, my borrowing for this financial year, so I am talking about same time period, my borrowing for this financial year, which is also known as debt creating capital receipt, will be around rupees 17.8 lakh crores. तो ये वैल्यू कहाँ से आई आपकी 17.8 lakh crores? When you subtract 27.2 lakh crore from 45 lakh crores, so you will get 17.8 lakh crores. So this is the amount that government is going to take as a borrowing. Clear? this is the amount that government is going to take as a borrowing for this time period. So which is your running time period? Clear? Which is your running time period. So this is about this video. So if you have any doubt, so you can either put in comment section. So I'll try to resolve there. But if you put your doubt here or post your doubt here, so I will be available there for you. Okay. So you can message me. So I'll reply you. That is on Instagram. So I'll reply you. Okay. So you can put a message there. Okay. So I can reply you within 24 hours. Okay. So I hope you learned something from this session. And if you really learn this, so please continue with this series so that I can help you in understanding this subject in a more better way. So we'll meet again with our next video soon. So Jai Hind and have a nice day.